You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to the Options Playbook, the program where we break down cutting-edge option strategies and explain how you can incorporate them into your own portfolio. Whether you're looking to grow your capital with some offensive maneuvers or protect your investments with defensive plays, you can find them all in the Options Playbook. The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities LLC, member FINRA and SIPC. Now, let's open the playbook and get started.
Welcome to Options Playbook Radio. I'm your host, Brian Overby, Ally Invest Senior Options Analyst and author of the Options Playbook. All right, so we usually start by doing a quick review, but there's really not much to review. Last week we talked about FOMO trade, and we've talked about quite a few of these. We've looked at them in the ETFs in sectors that you might think are due for a little bit bigger pop going into the new year, that have underperformed relative to some of the major indexes. A couple of the industries we looked at the one, the ETF called JETS, J-E-T-S. That's the symbol about the airline industry. Then we also looked at some XLF, some of the financial companies, looked at a longer-term in-the-money option contract on that underlying. The biggest thing that we always wanted to talk about when we talk about buying longer-term options is the market liquid? Do we have a fairly tight bid-ask spread? And a lot of these ETFs, it is. Last week, we chose to get a little bit more speculative with the concept, and we looked at a fig leaf in Boeing. Now, Boeing obviously has been all over. It dominated the news before the pandemic with all the headlines about their airplanes and the bad crashes that they've had. Obviously, that's very sad news overall. But now we're finally seeing that plane that is flying once again. So maybe it's time to think about Boeing. And that was the whole concept of the show. So since we talked about it last week, Boeing hasn't done much. But we did mention a fig leaf, which means we're buying an in-the-money call option, going a little bit further out in time. And then we're going to sell a call option against it to try to generate some premium. Well, if you did that, well, then this week wasn't that bad for you because the underlying stock did not move very much, and that allows some time decay in that shorter-term option contract. So what will we do? We just stay the course. If that option contract does expire worthless, the one that we sold, well, we can think about selling another one. And usually the goal with a fig leaf is to try to generate enough time premium on shorter-term options to cover the time premium that you're paying for on the long-term option. So it would just be a stay the course and just watch where the underlying stock is at. And obviously, when you're dealing with options and you're dealing with fig leaves, where I'm selling a call against an actual option contract, we really want to try to avoid assignment. So we're going to pay a lot of attention if that underlying stock ever gets to our actual short strike price. So that is actually a good segue. Today, we're going to actually look at kind of a similar trade. It's just going to be a little bit more speculative. But recently, if you look at the FANG stocks, we've had a lot of the FANG stocks kind of underperform even the small caps. Right now, the Russell 2000 index actually just set a new high just this week once again. And it's really leading the way in this marketplace. So we have a Fed meeting today. And I should mention that, by the way, that we are taping on Wednesday, December 16th. The market is open, but the Fed has not spoke. So their meeting is going to be this afternoon. They're going to be having a couple of press conferences, et cetera, et cetera. And because of that, the markets are basically a little bit flat. I think they're just kind of waiting to see what the forecast is for the Fed going forward. But we did have Apple do a little bit of a breakout just yesterday. We saw Apple make a 5% move to the upside. It's a little bit flat today, but we are not anywhere near its all-time high since the pandemic, or just all-time high period. So maybe on a few of the FANG stocks, which kind of sold off after the announcement of a lot of the vaccines, that I guess they were considered stay at home, or just maybe some people taking some profits because those stocks did extremely well since that March downturn from the pandemic announcement. So as always, this is not meant to be a recommendation, but we're looking at situations where some of the plays might apply to this particular scenario. And one of the biggest things that we've had to talk about, just can't be ignored, we still have the VIX index north of 20. It doesn't seem like it can break that level. And then we also have a lot of volatility in a lot of these underlying stocks. Even though a lot of them aren't near all-time highs, we're still seeing that volatility, that juice in these option contracts continue. So what type of strategy would we want to do with that? And we haven't talked about this one in a while. I'm going to actually call this a long call spread. And inside the options playbook, it would be a long call spread or a debit spread or a bull call spread. Those are some of the names for it. But we are going to take some of the concepts of the fig leaf in that we are going to buy a little bit deeper in the money. We're going to try to get a little bit more stock representation with Apple. And then we're going to sell the same expiration, but we're going to go a little bit further out of the money. So it's a little bit of a covered call or a fig leaf scenario, but not quite, right? In this instance, it's going to be a little bit more speculative, hoping that that little breakout that we saw on the chart in Apple would continue going forward. So let's just jump right into the trade. So right now we have Apple trading at 127.12. After over a 5% move to the upside yesterday, we're down 76 cents on the day, or just a fraction of a percent. We would be going out to the January 15th expiration. So this is something that you're thinking you want to get through the holidays, maybe a Santa Claus rally. There were a couple of years back where we had a very big move to the downside over the holidays. But if you shut off your TV and computer before you got back, the market was already back to where it was. So hopefully we'll just get a solid move to the upside. Maybe the Fed can kind of spark that a little bit today, but you never know when the Fed's going to be talking. So January 15th expiration of 2021, we're going to buy the Apple 122.50 call, a little bit in the money. And then we're going to sell the Apple 140 call. Now that 140 call is trading for $1.25. So we're still getting a solid amount of premium to help lower our debt of our in the money call option. And that's that's due to the volatility premiums that we have. So it's very hard to just buy options outright in this marketplace. We went a little bit in the money, so we are getting some intrinsic value on the option contract that we bought. But as far as the time premium is concerned, there's about $2.50 worth of time premium in this option contract. So by selling the option, we're going to kind of cut that in half, right? We're going to take some of that time premium out, but it's still a factor. There still is time premium in it, and we got to be aware of that. So we got to be thinking of a fairly strong move to the upside. So in this instance, at 140, the width of our spread is actually going to be $17.50 50 cents. So we're legitly trying to target a decent move to the upside. It would be about an 8% move, if you will, if we could get it to the upside on this underlying stock. So is that feasible by January 15th? Well, the options inside the option chain say that that is a plausible move. It'd be a little bit just outside of the expected move, but it is plausible that it could happen by that point in time. And so if we do this, this is an alternative to just buying the stock outright. You're hoping that you can see a little bit of a move towards the all-time highs like the Russell 2000 index and a lot of the small cap stocks are doing. Maybe the FANG stocks could get a little bit more favored going into the new year, holiday shopping season. Amazon, Google. Google's actually done the best recently out of the true FANG stocks overall. Google has actually been a little bit stronger than Amazon and Apple. And at this point in time, it's trading at a midpoint price of $6.40. You can never guarantee a midpoint price fill. If we do this spread, our maximum risk would be $640 plus commissions for every 1-by-1 spread that we did. And our maximum upside potential on this would be $11.10, or approximately 8% of the current stock price overall. So $11.10, that would be $1,110 would be the maximum upside if we could get that stock to make that move all the way up to the 140 level. Now, if you're doing this trade, it would be an alternative to buying the stock. I think of this more as I'm seeing some decent things on the chart going on. It's a short-term pop towards all-time highs in Apple, and I'm doing this as an alternative to buying the stock. So you can look at it this way. If I have some cash on the sidelines and I'd like to participate, but I want to limit my risk just going into the new year, well, I might be able to buy this underlying. And if I choose to on Apple, and I'm looking to eventually buy my 100 shares, I could think of this call option as a way to buy that underlying stock. So a lot of people buy options and only trade that option contract. But in some of these instances where we're keeping this theme of the FOMO market, we're going to get a lot of news over going into January. We'll have the inauguration going on. We have all the news of the pandemic and all of the pharmaceutical companies that are coming out with vaccines, which one's going to be better than the other ones, how's distribution going to happen. And we also have a fairly big runoff election in Georgia that will determine which party will be in control of the Senate. So a lot of news to happen. Not a bad way to approach it. Not a bad way to get some money in the marketplace. And in the long run, if let's say the stock in January was, let's say somewhere in the middle, let's call it 130. Right now, as I said, the stock's at 127. So we didn't quite get that big of a move to the upside. Well, you could just exercise your call option and buy 100 shares. Not a lot of people talk about it, but this is one way that you could use this option contract to take a position on Apple with limited risk. And if you wanted to, in the long term, position you to be able to buy Apple at a lower price if the market goes on up. But now if it goes down, guess what? We can lose $640 on our position. If we bought 100 shares going into the new year, do you think we could lose more than that on Apple? Yeah, we could lose that in a week. So interesting way to approach it. Another FOMO trade, not quite the fig leaf, but an alternative. We'll call it a long call spread in Apple going into the new year. And that's going to be it for this episode of Options Playbook Radio. If you have a topic you'd like us to discuss on the show or a question you'd like us to answer on the program, you can send them directly to me at theoptionsguy@invest.ally.com. Thanks for listening. We'll be back at the same time, same place next week. Until then, may all the options you bought finish in the money and all the ones you sold finish out.
The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities, LLC, member FINRA and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.